Assalamualaikum warahmatullahi wabarakatuh. Let me introduce myself. My name is Ardan Imam Rashid, and today I'm gonna talk about receivable management. One way for companies to increase profit is through credit sales. This credit sales must, of course, be managed through accounts receivable management. Selling on credit also provides a stable value of asset and capital so that the company will not lose money if there is a decline in sales. Even so, this receivable activity must be managed in such a way as not to turn around to harm the company. In a company, management of receivable becomes a very important thing. In accounting information when the company must determine what is the optimal amount of receivable for a company. In addition, receivable must also be managed efficiently because it involves a profit and cost incurred due to the receivable themselves. Because it is intended that all this process can run smoothly and not cause a build-up of capital that can result in the operation of a company. A good accounts receivable policy is a policy that can optimize accounts receivable management by considering this receivable. Next, definition of receivable management. The definition of account receivable management consists of two words that have the meaning of management and account receivable. Management is a process of planning, directing, and supervising which aims to achieve a predetermined organization goals. Meanwhile, receivable are claims on other parties in the form of money, goods, or service. From the explanation above, it can be concluded that the definition of receivable management is a planning and supervision process in the form of claims to others arising from the implementation of credit sales transactions. To control receivable, a company also needs to separate its personal and business finance and establish a credit policy for its business. But what causes a company to sell on credit? The reason is because selling on credit is a way to increase or prevent a decrease in sales. Because if a sale in your business increase, the profit of a business will also increase. However, having receivable can also cause various costs for the company. Therefore, it is also very important for companies to analyze accounts receivable management to improve business financial performance. Next, purpose of receivable management. First, receivable management is carried out so that the company avoids the risks that come from credit income, such as all receivable are uncollectible risks that occur if the amount of receivable cannot be collected at all. For example, lack of supervision, wrong customer selection, and other potentials such as unstable country conditions. Receivables that are not paid as receivable. This will have a direct effect on financial records which will reduce company profits. Fourth, payment of receivable past due. This can cause additional expense to the company which, if repaired, can be detrimental to, to the company. Low turnover of receivable on capital, which can result in the capital embedded in receivable getting bigger and ending up in unproductive working capital. Fraud such as failure to collect receivable due to irresponsible customer or cash debt. Technical errors in both billing and data entry. Lost or damaged receivable tracking data. Poor performance of human resource for accounts receivable collection. Next, accounts receivable problem example. To make it easier for you to understand this accounts receivable management, the following example of accounts receivable management problems will be present below. Suppose a trading company, PT Bermuda originally made it made its sales in cash. The sales achieved in the company PT Muda every year average 100 million rupiah. Then the company plans to offer in 60 sales terms. This means a buyer can pay for their current for the on the 60 day. It is estimated the way with the new sales term the company will be able to increase sales by up to 1 million rupiah. The profit margin is about 50%. Should the company switch to credit sales if the cost of funds is 19%? Next, credit requirements. The credit requirement in question include the provisions made by the company in managing its receivable. Credit terms include determining the credit period, cash discount, interest rates, and other terms given to loan applicants. Generally, credit terms are strongly influenced by the type of business being run, the form of cooperation, the condition of the creditor and debtor, the economic value of the product, and other relative characteristics. Billing policy. The debt collection policy is strongly based on the agreed credit policy, such as the amount of loan reserve, the credit period, and other special requirements. Companies must be observant in determining loan collection policy, starting from the collection media, whether through email, direct collection, or through agents. One thing to keep in mind in determining the collection policy is the strategy in the collection itself. For example, if the company is too aggressive to borrowers, in this case consumer, it is not impossible that they will turn to business competitor. In the case of employee loans, for example, a cumbersome and burdensome loan policy may cause the company to lose their best employee and may directly affect the company performance. Conclusion: in managing company receivable, reliable receivable management is needed, which is a process of planning, organizing, directing, and supervising in the form of claims to debtors who carry out the credit. Payables and receivable must be clearly recorded in the financial statement so that the business can continue to run smoothly and the financial condition is healthy. The suppliers need to be repaid on time to maintain a good relationship with the company. While customers sometimes forget to pay their debts if they are billed late, Mesop accounting software helps you to bill your customers on time. Mesop provides remind for overdue receivable every day for timely collection and improve the health of the company cash flow. With the report center feature in Mesop, you can record and create financial report including profit and loss balance sheet. sheet. Sales and others, manual recording and reporting will certainly take a lot of time and has a high chance of human error. This will hamper your company's efficiently and productively. Sekian dan thank you. Wassalamualaikum warahmatullahi wabarakatuh.